Pretend like you have Captain America's strategic insight guide you through the Wall Street's battle to triumph in the financial market. Warren Buffett's 2024 stock market strategy is real. Join us as we decipher Buffett's strategies, inspired by strategic minds similar to Jarvis from Avengers. Have you ever wondered what it takes to make a partnership truly epic in the world of finance? Perhaps one of the most iconic and influential among all finance-related is the one between Warren Buffett and Charlie Munger. The latest annual letter from Buffett to Berkshire Hathaway shareholders started with an emotional and deep tribute to his longtime partner and friend Charlie Munger. Two voices of genius, two individuals with unparalleled expertise, collaborating to create a business that would become a cornerstone in the world of finance. Munger was the shadow intellectual, creating the basis for what Berkshire Hathaway should become, and Buffett, the market's eye, who could gauge the flow and shape it as it was necessary. However, this partnership was something more than a friendship. It was a rare combination when two minds of similar brilliance united. But what if there was such a thing? Imagine you're about to step into the world of financial reports through this video. At first glance, these reports might seem straightforward and easy to understand. But as you dive deeper, you'll discover they're more like a complex puzzle, a financial maze that's not so simple after all. In this maze, we find Warren Buffett, a wise and experienced guy. He raises an important question against what many people usually believe. Why do we consider unrealized gains, money that a company expects us to make in the future but hasn't made yet, as a sure sign of how well a company is doing? It's similar to a farmer getting excited about the number of chickens he'll have, counting them before the eggs have even hatched, based on what he hopes will happen. This method, according to Buffett, isn't just misleading, it could actually be risky for a company's well-being. An investor trying to navigate this could end up completely lost. Buffett believes it's time to return to the basics of financial reporting. In his view, reports should clearly show what a company has actually earned or lost. The real numbers are not just hopeful predictions. This way, financial reports would serve their true purpose, providing clear, helpful information to shareholders. Shareholders shouldn't have to be detectives to understand what's going on in their investments. Buffett's call to simplify financial reporting aims to clear up any confusion, making it easier for investors to see the actual finance health of a company. By focusing on the real gains and losses, Buffett suggests a way to make the world of financial reporting more transparent and understandable to everyone involved. Growth is the dream of every business. However, as Berkshire Hathaway had demonstrated, there is a point where size would start working against the ultimate goal. Warren Buffett's comments on the complexities of scaling unveil the truth about business and investments. The bigger you are, the tougher it gets to make moves. Having the boundless possibilities of Berkshire, Buffett is challenged to find the investments that are worth his abilities. In many ways, it's like a leviathan sailing the seas with all the possible riches and the difference that there are a few places where giants can swim. The issue is not only related to the investment, but also to the problem of growth and focus. The hunt for the giants of the firms whose possibilities could be transformational for Berkshire is a kind of strategy that requires more than just a gut feeling, but rather a deep knowledge of market moves and trends to come. For many years, Warren Buffett has been skillfully navigating the dangerous waters of the stock market, guided by his never-ending desire for precious gems that are overlooked by others. His behavior in the stock market, actions, and investment choices suggest that he is more of a treasure hunter looking for gems. A treasure is often buried, to the delight of a few and the lucky. Buffett, after all, is able to master making the bulk of his strategy based on his differential thinking. Only those who discover hidden diamonds get wealth. Second, Buffett discovers his strength and makes other market participants become less confident because of his superior understanding of the market. Others see the tide of the COVID-19 pandemic as natural chaos and confusion. But Buffett looks at it as a stormy sea that hides hidden treasures. The COVID-19 period seemed like a perfect ground for the wise man Buffett, whereas it is a most scary place when we think of the rest of humanity. Buffett's long-term investment philosophy, in a quest for investing in the long-term contracts, when compared with the short-term investment culture, ranging from this diverse treasure landscape, no harvests have shown immediate growth. Ultimately, a strong economic and market foundation is required, as indicated by Coca-Cola and American Express, also known as Excalibur and Shield, among others. In this context, the history of the S&P 500 seems to repeat the myth of the phoenix rising again and again from its ashes. Every time after a market crash, it not only recovers, but often breaks its previous records. This vicious cycle of falling and rising is a reminder of the stock market's natural strength. Those who can think ahead of the breaking point will remember such falls not only as losing, but as opportunities to win big shortly thereafter. The fall happens unexpectedly, and it is always harder and longer than the last time, while the rise takes an unexpected form and rises higher than ever before. One could think of it as a forest fire. It's highly destructive and creates massive loss, but is ultimately beneficial for the ecosystem's future. Buffett's decision to keep thinking forward and investing in companies he believes in, even when everyone expressed negative thoughts, shows his understanding of this market's features. As we approach the middle of 2024, the economy seems to be in a rather state of unstable conditions. The possibility of layoffs, economic readjustments, and geopolitical conflicts places towering shadows over investors' plans and market sentiment. In the face of oncoming dangers, Buffett's vision seems to stick onto both a sign of hope and a sense of direction. He does not consider these opponents through a gloomy lens as barriers, instead as a farmer considering the harshest winter as an opportunity to prepare the most harvest. A businessman must focus on diversifying investments. In conclusion, this analogy should remind each student of the significance of being prepared, not simply for the hard seasons. Hence, a businessman or investor must accept the artificial and natural movements of the economy and be well prepared to plant the seeds of change even in the darkest hour. Thus, Buffett's philosophy is defined as a quest that lies between the foresight of economic brilliance and the seizing of the most opportunities of businesses. When all is said and done and our economy goes through its never-ending periods of trauma, two assets are left standing as solid ground: real estate and cash. One might imagine the stock market as a grand city full of skyscrapers and busy streets, with the skyscrapers standing as the high-flying stocks and the streets full of traders who move from one investment to another. Real estate and cash serve as both the solid ground and the safe hands. Firstly, Buffett references real estate due to certain values. As such, real estate's solid nature and its certain utility across different market cases leaves such an investment largely unaffected. Investing in real estate can be regarded as owning a part of the earth. When the market crashes, the real estate remains, providing investors with a foundation with which to reconstruct or expand. Secondly, cash implies liquidity. Two of the most prominent options in a wide portfolio of different investments include holdings in gold and stocks. Gold, a priceless metal highly valued as an instrument of glamour throughout human history, is precious as a financial instrument during periods of inflation and financial pressure. Gold is not only influenced by most of the market changes and is less likely to dip in value anytime soon. The value of gold lies in 4 digits that are agreed on by millions of people throughout history. Like gold, steel serves to bring together a working and growth-oriented portfolio. However, this comparison is appropriate since sheets of steel and steel beams form the buildings in which both businesses and bricks of gold are stored. Share your ideas for navigating the space below. If you found something useful in today's exploration, give it a like, share it with others, and subscribe to the channel. Until next time.